overwhelming the Bitcoin market with new demand, you're going to force existing holders to sell. And so you have to ask yourself, what level will they sell at? They've been selling at 100. I think they're going to get tired of selling there, and then it goes higher. And our prediction is it'll stop around 200K this year, but I think there's a possibility it goes even up to 250 if these sources of demand remain as strong as they've been for the last 5 months. The same thing is true of Bitcoin. If more people want this service, the ability to store wealth in a digital format without relying on a bank or a government, the value of Bitcoin goes up. If fewer people want it, the value of Bitcoin goes down. The only difference is you can't pay a fee to Bitcoin because there's no Bitcoin corporation, there's no Bitcoin CEO. The only way you can get this service is by buying the asset. If you buy Bitcoin, you get the service. If more people want the service, the value goes up.
According to Matt Hougan, the future of cryptocurrency, particularly Bitcoin, is overwhelmingly bright, even if short-term volatility erodes investor confidence. He thinks the long-term case is stronger than ever. Hougan uses Amazon as a potent example to illustrate his thesis, reminding us that the digital giant stock plummeted by between 80 and 90% multiple times before it became a trillion-dollar business. His message is straightforward but profound. The best possibilities frequently arise during the most difficult circumstances. Real gains come from long-term conviction. Panic sells are short-term reactions. Hougan states unequivocally, "I only purchase Bitcoin, I don't sell it." He intends to continue using such tactic for the foreseeable future. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
As we go down the line and realize that supply is actually even less than we thought.
Yeah, I think it's a really important take. This actually goes back to how we speak to different audiences. When we speak to crypto native audiences, this is something that we bring up all the time because many people's price target for Bitcoin involves taking the market cap of gold and dividing it by 21 million. And you can say, actually, you should divide it by 18 or you should divide it by 17 because there's the Bitcoin that's lost. There's Satoshi's wallets who, is not going to move the Bitcoin anytime in the future. So you can get down to 17 million as the max supply. When we talk to traditional investors, that's a layer too much complexity. We stick with 21 million because you just want to keep it simple for them. But I think you're right when you're talking to people who are more crypto native that the real available supply is much lower than 21 million. It may be 17, it may be 16, it may be 18, but it's in that zone. And I think it's a great point.
A lot of bad actors in this space, but if you're looking long-term and you're specifically looking on the Bitcoin front, it's kind of hard to not feel a lot of conviction in terms of where we're heading today, right?
Huge amounts of conviction. I think specific to Bitcoin, an incredible thing that's happened is we've removed a lot of the big risks to Bitcoin. We've removed the regulatory risk, we've removed the technology risk. It's now easy and cheap and safe to buy. And we still have a huge amount of upside. But absolutely, it is a lesson. You have to invest for the long term. Amazon stock went down 80 or 90% a couple of times. And look at it today. It's a multi-trillion-dollar company. If you panic and sell at these bottoms, that's where you get in trouble. Just hold for the long term. I only buy Bitcoin. I don't sell it. And that's what I'm going to be doing for the next handful of years. Criticism of Bitcoin is that its price is set by supply and demand. But that's also the benefit. And so we just look at the supply demand characteristics of Bitcoin. We know that the Bitcoin network will produce 165,000 Bitcoin this year. And then we look at ETFs, which bought 500,000 Bitcoin last year, and corporations, which bought 300,000 Bitcoin, and governments, which we think could buy hundreds of thousands of Bitcoin. There's just more demand than there is supply. And we think eventually that has to force the price up to the point where existing holders are willing to sell. We've seen Bitcoin's price sort of trade sideways around $100,000. I don't think that's a mistake. People are people. They're willing to sell at nice round numbers like $100,000. I think eventually, because there is endemically more demand than supply, we're going to exhaust the people willing to sell above $100,000. And then you have to ask yourself, where's the next point where they're willing to sell? Is it 150? We think it's 200. It could be 250. But as long as you have ETFs, companies, and governments overwhelming the Bitcoin market with new demand, you're going to force existing holders to sell. And so you have to ask yourself, what level will they sell at? They've been selling at 100. I think they're going to get tired of selling there. And then it goes higher. And our prediction is it'll stop around 200K this year, but I think there's a possibility it goes even up to 250 if these sources of demand remain as strong as they've been for the last 5 months. I definitely think that's a possibility. You know, Bitcoin whales need to eat. So they need to pay their mortgage and they need to buy groceries. And that's one of the reasons you see selling over time. And to the extent that we're financializing Bitcoin, I think that will encourage more people to just hold on for the long term. We get a lot of inquiries from people with large amount of Bitcoin who wonder, how can I generate a 5% yield on my Bitcoin? In the past, maybe that was by selling 5% of your Bitcoin, right? Today, it may be by doing option strategies, it may be by lending. So I do think that further constricts the supply. I really think when you dig into the supply demand numbers and you just put them on paper, it's pretty shocking. There is this big mismatch between new demand and supply. That doesn't guarantee that that will continue, right? The new demand could weaken. There could be news events that cause it to disappear. But right now, this new demand is just massive. And as you mentioned, things like lending and option overlay strategies are maybe even encouraging people to hold on to their Bitcoin longer and further shrinking available supply. It's an incredible setup.
In addition to being a market analyst, Matt Hougan is a passionate supporter of Bitcoin. He has given his Bitcoin 101 talk over 400 times in the last 7 years. Hougan makes a compelling analogy between the history of Bitcoin and the early ETF era. In those days, people were skeptical. They went unnoticed by Wall Street. Their authenticity was even questioned at hearings convened by Congress. ETFs, however, are already a $15 trillion asset class. His approach is straightforward. Thoroughly understand the value, articulate it, and repeat it frequently. He is currently promoting the acceptance of Bitcoin by employing the same strategy. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
I think the US is going to buy more Bitcoin this year. I think the US is going to increase the amount of Bitcoin it holds on their balance sheet. I think that's going to happen. If I was more creative, I'd come up with a fun one with Elon Musk, but I don't have that. But I think that'll happen. Look, I think crypto is going to be the best performing asset class in the world this year, as it was, the previous year and the year before that. I think this bull market has significant legs. So I'm probably not being bullish enough if I'm being honest. So, there are two things that happened to Ethereum. One is that they slashed fees on the network. So the revenue of the network fell by like 95%. The reason they did that was because the transaction cost to participate in the network was way too volatile. So they built these layer 2 networks, which dramatically drove down the cost of executing. When you do that as a technology, when you drop your cost 95%, you need to see your use case uptick dramatically. And that is happening in ETH, right? As I mentioned, it's up about threefold over the last 24 months. That's pretty good, but it needs to be up 10x. And I think the market is impatient as it waits to see Ethereum, quote unquote, make it up on volume. The other thing that was challenging Ethereum is that the Ethereum Foundation, which supports the network, sort of had an academic-y feel. They weren't reactive to what was happening in the market. They weren't shipping fast enough. They weren't caring enough about competition. They weren't focused enough on UX. One of the reasons you've seen Ethereum bottom and start to rally is that the Ethereum Foundation got religion. They changed their leadership. They focused more on execution. They're saying the right things. I think Ethereum is a unique contrarian opportunity in crypto. So much of crypto investing is chasing the latest hot dot. The thing that's interesting about Ethereum is the price is down substantially, but it's still the leader in stablecoin activity. It's still the leader in tokenized real-world assets. It's still the leader in agentic AI. And so you have a low price, but I think improving fundamentals, and that's a pretty interesting thing. Value investing in crypto are not words that go together very well, but I think there's a case to be made that Ethereum is sort of a value opportunity, at least for a sort of a near-term bounce. Is that Bitcoin provides a service. The service it provides is the ability to store wealth in a digital format without relying on a government or a bank. Some people don't want that service, but evidently hundreds of millions of people do. And if you think about a service, it sort of solves this problem, right? Microsoft offers a service, the ability to do word processing or Excel documents. If more people want Microsoft Word and Microsoft Excel and Microsoft, video and Teams, the value of Microsoft goes up because people pay a fee for that service. The same thing is true of Bitcoin. If more people want this service, the ability to store wealth in a digital format without relying on a bank or a government, the value of Bitcoin goes up. If fewer people want it, the value of Bitcoin goes down. The only difference is you can't pay a fee to Bitcoin because there's no Bitcoin corporation, there's no Bitcoin CEO. The only way you can get this service is by buying the asset. If you buy Bitcoin, you get the service. If more people want the service, the value goes up. And I think once you start talking about it that way, as a service, and not this mythical internet money, but a service, just like Microsoft or Salesforce or any other service we provide, you can see that the economics are the same. More demand, more value, less demand, less value. And what we've seen over the last 15 years is sort of 15 years of more and more demand for this service. And I think we're going to see another 15 years of that in the future. So first, you have to have a fundamental confidence in it. And that means understanding it at a first principles basis, reading the Bitcoin white paper, really understanding why it's a fundamental technological advance. Because if you're going to do this for multiple years, there will be periods where you'll ask yourself, wait, am I off base? Is this real? So you have to have that fundamental understanding. And then you have to be willing to tell the same story literally 1,000 times with the same level of energy. I have given the Bitcoin or Crypto 101 presentation over 400 times in the last 7 years. The thing that gives me a great deal of confidence is the same thing was true in ETFs. So I was the CEO of ETF.com. ETFs today are the most common form of investing, $15 trillion. But when we started ETF.com, people were very skeptical. They labeled them weapons of mass destruction. Major Wall Street firms wouldn't launch ETFs. There were congressional hearings about ETFs being a threat to the American dream. And the same rule applied. I understood it at a fundamental first principles basis. I saw the benefits, and I gave an ETF 101 presentation 1,000 times. If I and all the other great speakers in Bitcoin have to give Bitcoin 101 presentations another 1,000 times, we're going to do it. And if you keep doing it, you'll eventually get to where we all want to be. So that's been sort of the mindset, and it's been working out.
Matt Hougan offered a critical analysis of Ethereum's long-term prospects and current difficulties. He started by outlining how Ethereum's network revenue has decreased by 95% not due to a malfunction, but rather as a calculated decision to lower costs. Users were finding it difficult to join because of high transaction costs. Thus, Ethereum provided Layer 2 methods to lower those costs. A significant increase in consumption is necessary to offset such severe cost reductions in the electronics industry. Stablecoins and real-world asset tokenization are two examples of Ethereum's use cases that have tripled in the last 2 years. Additionally, he noted that the Ethereum Foundation was too scholarly and hesitant to adjust, which contributed to Ethereum's slow development. However, the network is currently turning around thanks to new leadership and a fresh emphasis on user experience and execution. According to Hougan, Ethereum is undervalued because although its price is still low, its fundamentals are improving, which presents what he refers to as a contrarian opportunity. Even if the majority of cryptocurrency investors follow the latest trends, Ethereum continues to lead in practical applications such as tokenized assets, stablecoins, and even AI integrations. Lastly, Hougan compared Bitcoin to a service like Salesforce or Microsoft. It is valuable because it gives citizens an alternative to banks and governments for digital wealth storage. Bitcoin's value increases as more people desire that service. Additionally, Bitcoin does not have a corporation or CEO like typical businesses do. Owning the asset itself is the sole method to use the service. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.